Good afternoon, everybody, and welcome to today's edition of ChartWatch Live. My name is Capolingua. I'm from Market Index and Livewire Markets, and it's a pleasure to be joining you today to talk about, well, really the stocks that you want to talk about on the ASX. Hey, but last week we talked about platinum and palladium, both of those going up. So let's talk about anything really that you want to talk about. Could be trading related, but we're going to try and keep it tight because our time obviously is limited. Today's agenda, we're going to kick off with our portfolio management model, looking at the Nasdaq. We'd love to check out the Nasdaq chart and the S&P ASX 200. We'll check out our risk settings there, and then obviously we'll get to your requests. We're going to kick off with the Amy Broker screen. And this is where we do our analysis of our portfolio management model. Hey, it's my portfolio management model, but some of you may wish to investigate how that works. And what I have is an overall cap on how much capital I can risk in a particular market at any one time based upon a benchmark index. And in the US, it's the Nasdaq Composite. You might say, hey, Carl, I'm trading US stocks. This is boring for me. But we do know that, hey, when the US when the US sneezes, Australia catches a cold. So I'd like to keep an eye on this. Even if I was only investing in Australia, I still want to keep an eye on this. And what's the eye I keep on it? Well, we're just going to check the trends, aren't we? What are they? Short-term trend, that's my light green ribbon. Well, it's light green because it's up. It'll be pink if it's down. Can we see any pinks? Oh, we can see. We've got some pinks here. And I don't know if you remember, back in that February downturn, it was quite early, I want to say, that I changed my maximum risk setting here for the Nasdaq. I think quite early, and I go from a maximum risk setting of fully invested, so 100% capital, and then a quick notch down to 2/3. I might go a half, and then a third, and I stayed a third. And we went through that cycle through here. Fortunately, we don't have to do it today because everything is hunky-dory. Short-term trend's up, long-term trend, that's the dark green ribbon. The price action is the relative position of our points of supply. They're the bits that point up like this. I'll just draw one on the chart for you so we all know what we're talking about. Point of supply, the bits that point up like that, and the next time I draw will be a point of demand, and I'll make sure it's a full red line this time so we can see it. But they're the bits that point like that, and we want to see those relative positions. The price action, I call it climbing up the screen higher, peaks and troughs effectively. And then the candles, we want to see more white candles, don't we, than black candles, more downward shadows, then upward pointing shadows, because both of those things speak to accumulation in the market. In fact, all of those things speak to accumulation and buy the dip activity. Demand side control is another thing that I like to say. And when the demand side is in control of the price, prices tend to go up more often than not. Capital M, capital O, capital T, capital N, more often than not. That is the trend follower's best friend. And we're just trying to position ourselves accordingly. So I can't see a single reason not to have all of my money invested in the Nasdaq, and therefore I must be FRP. All those acronyms coming out today, full risk position. And you'll see often these terms in my writing on Market Index and any of the ChartWatch sections. And I do know we've always got people coming on board, so I don't mind repeating those things again. Over to the ASX 200, probably more important for many of the people listening. And I have set to go to 2/3 on this one, haven't I? And I think rightfully so. If you're investing in the ASX 200, I think you're actually pretty happy if you've taken a bit off the table, gone to cash, and just sitting out some of this volatility with the cash. Hey, you're still 2/3 invested, so you're still enjoying the fruits of anything the market will and can give us, which isn't a lot at the moment. Let's face it, we're stuck between the 4 8s, aren't we? 4 8s, 8 8 8 8 up the top, and 8 7 3 1 down the bottom, and it's pretty simple here. Until we crack one of those levels, we're probably going to stay in that range in a fairly, we're better than neutral, aren't we? We're not neutral, we're better than neutral because of the long-term uptrend. We're still in a bull market. That's why I think we need to be better than neutral. Of course, if we were to close beneath 87.31, that would concern me, and I'd probably be moving to my next risk setting down, which would be 50-50, 50% cash, quite aggressively in cash when you think about your typical balanced fund. I don't know if you remember old Bernie Fraser, the super of the future. I'm using some round numbers here, and I can't prove them, but they're in the ballpark, right? So 80% of Australia's superannuation is in this balanced option. Again, I can't prove it, but give or take, I think we all know that's about true because it's the default option. If you don't choose, you get put in the balanced option, and about 40% of that balanced option, give or take, is in Aussie shares. And then, there's overseas shares, property and infrastructure and stuff like that. But the maximum allocation for most balanced funds would be somewhere between 5 and 10% of cash. So that's as conservative as the super of the future can go if the market was to completely, and speaking French here, crap itself and go down 20, 30, 40%, or back in the GFC, 55%. So my model gets us into a whole heap of cash very, very quickly. And that's the place you want to be if it was to all, what was the French word? I can't remember. But it just shows the difference, I guess, between going passive and active. But bottom line is here, we said 2/3. Now, I just want to digress a little bit. This is Amy Broker. While I'm finding the next thing I want to talk about, we'll mention that this is Amy Broker. It's just the charting package I use. It's the one I've used for many years. You can use any one you want. Don't get caught up on the charting package. Get caught up on the trends. But I wanted to show, as we talk about, ad nauseum, the old tin pot, don't we? The old tin pot of the ASX 200. A few banks, a few resources, Telstra, Wesfarmers. And, okay, we talked about the benchmark being 2/3 RP on the ASX 200, but maybe this is a better benchmark. I wonder if your portfolio, because you're following my ChartWatch scans, right, and when we're finding just oodles and oodles of opportunity there, and some of those trends are just blow your mind, incredible. And I wonder if this is a better benchmark for some of the stuff we're doing. ChartWatch followers, trend followers, maybe that's better benchmark, because what would you be here? You'd be fully invested, wouldn't you? And yet you look at the ASX 200 and it's not. So it's telling you, the big cap stocks aren't doing a whole lot, but scratch underneath the surface, and there's plenty of movement on the Aussie market. Okay, we're going to head over here. Don't worry about that particular chart, because this is where I start to answer your questions. Now that we've established, I guess, are we looking to add risk, or are we happy with our risk levels? For trading US shares, we're certainly happy to add risk if we can find it. If we're trading in Australia, well, benchmark would say maybe not as keen, but the small odds would say, hey, all full steam ahead. Okay, we're going to get to, I can't remember where I said the first one would be, but I can see Michael here. So let's do Michael with thoughts on APE. So we're going to head over here. Actually, we're going to go head up here because that gives me access to everything. And APE, we talked about ChartWatch scans, which I do for you every day. And I take every stock. So the starting point for my ChartWatch scans is every stock on the ASX. And that in itself, I think, is awesome, because pretty much nothing gets left behind. I run an algorithm over it to narrow it down, but it's a pretty basic algorithm, pretty much just based on my trend ribbons that you all know, and that narrows it down to maybe, look, on a busy day, 200 to 300 stocks, which I then individually myself go through each one, check the charts, and I'll narrow that down to the ones I think I'm happy to add risk to, and then I've got my feature charts, which are the ones I think are the best of that list. And APA, I think, would be a feature chart, I want to say 20, 30 times over the last 12 months, probably more, and you can see why. And any time you see that as a feature chart, obviously I'm happy to add risk. Imagine if you had added risk on those 20 or 30 times and pyramiding in to a particular trade like this. I think you'd be pretty happy with how things are going. And the good news is, and I think where I differ from a lot of people you might see, let's call them talking heads or experts out there, is that I think a lot of them would look at a chart like that and say, well, that's gone up a lot, APE's expensive, or it's become overvalued. And I'd look at that and I'd say, well, it doesn't matter what I think. What does the market think? What does the demand side think? What does the supply side think, and who's in control? And if we think about what the demand side actually is, you hear me mention that term all the time, the demand side is simply cash. Demand is cash, ladies and gentlemen, cash looking to find a home. And that cash has as opportunity every potential thing you can buy with cash, from a Mars bar down at the shops, because you can buy a Mars bar and that would have an opportunity cost associated with that Mars bar, because you can't buy an asset that appreciates in price, to APE, to gold, to silver. And what we're seeing here is that clearly, and you don't need to be a rocket scientist to figure this out or have any experience of markets, but clearly people are throwing their hard-earned cash at APE shareholders who have the other side, which is supply, isn't it? They've got the shares. So we know that the demand side loves this stock. They're throwing cash at it. They're highly motivated because they're bidding the price higher and higher and higher to try and entice out that supply. But what's that supply doing? That supply doesn't want to sell. Why does the demand side like this stock so much? Well, they've done the analysis. They've done all that fundamental analysis, and they've determined that earnings are growing at a rate to then make this an attractive opportunity relative to its peers. Management is good, opportunity is good, all of those fundamental factors we'd normally want to look at if we were fundamental analysts. But guess what the supply side's done as well? They've done the exact same analysis, and that's why they don't want to sell. Now, they're selling a few. We can see that as it goes up because we've always got volume. Volume is buying and selling. But they're reluctant to sell unless they're getting compensated by higher and higher prices. So if we put aside what we think, because a lot of people, I think if I put that chart in front of you before you met me and I said, would you buy that? You'd probably say, no, it's gone up too much. But that's what you think, remember. Start to think like the market. What does the demand side think? They love it. They're throwing their money at it. They can't get enough of it. What does the supply side think? They love it. They don't want to sell any. And this is consensus. Both sides of the market agree, and this is the trend followers' holy grail. You've heard me say that many times. And we are looking for the strongest consensus because the strongest consensus, the greatest demand side control, generates the best trends, the ones that go up the most, but with the least volatility. Because if there is consensus, you're going to have low volatility as well, right? Everybody's trying to be on the same side of the market. So to answer your question, Michael, I think you understand, you know my thoughts on APE. I think it looks fantastic. I'd happily add risk to this. That's me. What you do with it is up to you. And look, FRP is another way to put it. If I had shares in this, I'd be holding every single share that I had. If I didn't, I'd be looking to add risk across the universe of opportunities to add risk. And we're going to see many of them today, or check ChartWatch scans uptrends list for that from what I think the university, this is a little bit like university, what the universe of opportunity is. Can I then write on the chart? And what I want to do is, here's capitals please, Carl, is write on the chart something like FRP, and I might even go plus R, right? Just to say, look, I'd be happy to add risk. So at full risk position, you know that terminology, you've heard me use that several times. I'd be happy to own what I own on it, but plus R. That means I'm happy to add risk. And that's the way I think of the market. Am I adding risk? Am I holding risk? Am I reducing risk? I don't care what chart it is. They're just pixels to me. Thank you for that one, Michael. Let's keep moving. I should say while I'm finding the next one, Eve saying thanks for this education. My pleasure, Eve. And I can't. Number one, I can't keep it in my head. It's got to come out. That's just the way I am. And number two, I know that I can't take it with me. So I want to get that information out there. And if it helps people, then that's wonderful. And if it doesn't, then hopefully they find the thing that eventually does. That's why I do what I do. Let's go to David's got MAF. I should say that I don't know what's going to happen next. So with APE, today could be the top. Absolutely. Something could change in the fundamentals for APE or on a more macro level for the entire market to cause the demand side to reconsider their views on APE. And the supply side similarly to reconsider in a similar way so that the demand supply dynamic changes instantaneously. It could change in the next 5 minutes. But what we would see in the chart are signals of this. It can't happen. It cannot, I assure you, ladies and gentlemen, it's impossible for the demand and supply sides to change their views on a stock like APE without us seeing it in the chart. We will get fair warning. We'll see the black candles. We'll see the upper shadows. We'll see the lower peaks. We'll see the lower troughs. We'll see the interaction with my trend ribbons and those trend ribbons changing. And this is what I say. If you have these tools, then why would you fear buying something like APE? If you didn't have these tools, then it becomes really scary. Oh, Carl, if I buy that, it's going to go straight down. We often think that, there's the managing director, isn't it, of the Australian Stock Exchange. And I've got a webcam up here. I'm pointing to it, and you've probably got a webcam somewhere on your laptop there. And did you know that webcam is always on? And it's a live feed. It turns on when you turn on your ComSec screen or your Bell Direct or a CMC, wherever you're trading. It switches on the camera, and it's a live feed straight through to the managing director of the ASX. And he's watching you trade. He's watching what you do. And when you're going, oh no, I can't buy that. Oh, it's gone up too much. I can't buy it. No, I won't buy it. Oh, I've missed it. Oh, I've missed the boat. Oh, I can't take it anymore. Buy. As soon as he hears you say the words, I can't take it anymore, and you hit the buy button, there's a bell that goes off at the ASX, ding, 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 and all the brokers and all the fund managers start selling the stock you just bought. I assure you. It's not true, okay? It's not true. That's a joke. If you buy APE, it won't crash immediately. That's my point. Let's go to MAF. What's happening here? Now, we're seeing some strong signs on MAF. We've got a bit of a template to look at this, so I can speed up my analysis from here. We have a short-term uptrend, and we have a short-term downtrend. Let me get that off. Now we can see the arrow. A short-term uptrend and a long-term uptrend. But the problem is the price action. And what's great about the moving averages is they're quick, right? So I said to you before, I go from 2,000 stocks. The algorithm, the computer takes me down to, probably 10% of that, but I have to do it manually. And I can scan through my list very quickly by just looking at the ribbons. And that's how I get the list through the list very quickly. If I don't like the ribbons, I'll move on to the next one because it's the color. The colors just smack us in the face. Double greens, I'm going to look at it a little bit closer and start to investigate the next thing. If I don't get those double greens, I'm probably going to move on pretty quickly. So saving time on this, I'd probably move on, to be honest. I wouldn't spend any more time on MA Financial in terms of answering the question plus R. Do I need to add risk? So right now, you won't see me write plus R on this one because I don't think there's an urgency to do it. There's so many other charts out there with big greens, big white candles, lower shadows, great price action. Because if we look at the price action on this, and this is where it's going to get filtered out, that's an important word, because ultimately what we're trying to do as traders or investors is find the best of the best. And we have to ask ourselves, is MA Financial the best of the best? And it might not be the best of the best today, it might be next week, because it does have some good stuff happening in those trends. And nothing goes up in a straight line. Things are going to go sideways. We're going to see little bouts of equilibrium come in. The demand side is largely in control here, but then we hit a number like $10, right? Oh, look at that. Ladies and gentlemen, points of supply from the past often behave as points of supply going forward. So, now I didn't know I was going to find that, but it certainly explains what's happening here. The thought bubble I was working on before I saw that was, we know the demand side's in control, but nothing goes up forever. We're going to have times where some fund managers want out for whatever reason, and those reasons could be absolutely fickle. So for example, the fund managers, and I know it's not exact, but the fund managers who bought the dip here, right, they're roughly doubling their money up at $10, okay? And I know this sounds really fickle, but some investors will think that way. I've doubled my money, I've had a good run on this, it's starting to look overvalued, whatever their narrative is, because their narratives aren't based upon demand and supply like mine. But whatever their narrative is, it increases the amount of supply that's coming into the market to start to equate with the excess demand that was in the system. Was there excess demand in the system? We'll look at the trends into that $10 level. $10 a round number. People just are thinking, you know what? If MA gets to 10, I'll sell a few. I won't sell them all, but I'll sell a few. Okay, it's just the way the human brain thinks. And that sell a few mentality starts to work into that excess demand. So it becomes equilibrium. What happens when you've got equilibrium between demand and supply? Price goes sideways. And we've got less consensus. By definition, the demand side and the supply side are less certain. Because if they were more certain, it'd be all demand and no supply, the price would go up. So because we've got some uncertainty creeping in on the supply side, that creates that supply, we get equilibrium. Equilibrium is indecision. As traders, we don't like indecision, so we'd ordinarily pass this pretty quickly. But how do we, I guess that's subjective. How do we objectify this concept of indecision? And that's where the price action comes in terms of the peaks and troughs will start to coincide. We'll start to get some lower peaks and lower troughs, but here we're almost just mixed. The candles will become mixed. Instead of predominantly white candles, downward pointing shadows, we'll start to see more black candles creeping in, as we've seen here. Okay, and they'll probably coincide with some of those lower peaks. The trend ribbon will start to change colour. That'll probably happen at the end. And we'll start to get below the trend ribbon. So does this mean MA Financial is a lost cause? Absolutely not. We've still got this great long-term uptrend, and we're waiting for that demand side, if it occurs, if they're strong enough, if they're motivated enough, if they're powerful enough to soak up that potentially temporary influx of supply. And once they've soaked up that supply, in the absence of that supply, in that developed supply vacuum, well, guess what happens? These technical analysts call them breakouts, don't they? But is there urgency today? I don't think so, because if we're closing in on that breakout, on that point where demand is now increasing to overwhelm that supply is decreasing to then allow that demand to become excess demand again and take over, we'll see more white candles. We'll see downward pointing shadows. We'll see high peaks and high troughs. We'll close above 10. And that's when you'll see me put something on the screen like plus R. But not today. Not today. I just don't think the urgency's there. In short, I think you can hold this one. It's certainly worth holding on the basis that we're in a long-term uptrend, but I wouldn't be adding risk. I'd also, because always, and this is a default, this is whether I'm adding risk, holding risk, or reducing risk, I still want to know where my exit is, because think about, James Bond walked into the Monte Carlo casino, the villain's playing baccarat over there. There's the bar over there with the curvy brunette, and of course his martini shaken not stirred, and all of these things are of course very interesting. But the first thing James Bond looks for is the exit. Where's the exit? Just in case some henchman jumps out of a broom closet with a machine gun, he knows how to get himself out of that difficult situation. So we should always know where our exit is as well, just like James Bond. And for me, and this wouldn't be necessarily a complete exit, but can I introduce this concept with you on Wednesdays now, this idea of minus R. Okay, because if you've read my work in ChartWatch, you know I hate to be all in and I hate to be all out. Or I hate to get all in at once and I hate to get all out at once. That's probably the best way to put it. I like to add. We saw APE 20, 30 times. Happy to add risk. Each time it appears in ChartWatch is a time I'm happy to add risk. If it stops appearing in ChartWatch, well, that should be a red flag. But I don't do that because it's not a signal service. I won't tell you when to get out. That's your job, using some of the stuff I've taught you. But where would James Bond start to think about managing risk here? That's what I call it. Do I need to manage my risk? I don't need to add risk, but where do I need to manage my risk? And I think somewhere beneath, if we're closing beneath that point of demand, because that's what that V-shaped is, it's demand. It's a point of demand. It's a point where in the past we saw excess demand. And if we saw excess demand buying the dip here, buying the dip here, buying the dip here, if we were to close, and particularly, and I think you know where I'm going with this, if we were to close with a black candle. Now imagine we saw a black candle on MA Financial that looked like this. How would you feel about it? Number one, we know black candles are a big no-no in an uptrend, potentially in and of itself, depending on its magnitude, a reason to manage our risk. But what does it say about the demand that was in the system? That excess demand that kept buying and buying and buying. I put to you that demand has been satisfied. It's been consumed. The cash that was there has been consumed by the shares selling and then taking that cash. And that for me would be a problem. So long story short, and there's going to be some long stories as we're getting the hang of it. You're learning how I do things. Let's go. Let's take the candle away. We don't need that. And we can actually leave this arrow, I think, because it becomes so simple for me. And trading, investing, I think, keep it simple, stupid. Is this the way we should be thinking about MA Financial right now? And extrapolate this out to every stock in your portfolio. Every stock in your portfolio. Let's go FRP. Or maintain risk. Whatever you want to call it. Maintain risk position. Full risk position is maybe too strong a word. I could go MRP, if that makes you feel better. Maintaining our risk position, adding our risk position, reducing our risk position. Sounds pretty good to me, doesn't it? If we were thinking like that about every one of our stocks. Okay, got to keep moving now. As I said, template stuff, so we could go a bit faster. We're going to go to, can you clarify, Michael's saying, can you clarify the meaning of shadows, short, long, up and down? Okay, starting with the shadows. This one's easy. And look, I think this is a really good question. So the shadow is the line part of each of the candles. Okay, and there's lots of line parts. Let me point to a few of them for you. That's the most prominent one there. We'd say that's a downward pointing shadow. It's where the price action didn't stay, but it was there at some stage. Actually, I couldn't find a better example on this. This is awesome. Look at that. What's the price action there? Full black, gapped up at the open. And I'm not going to go into how candlesticks are formed. Google that stuff. We'd be wasting our time here. You can find that out for free in your own time. But let me say that we opened high here. We got wiped out. We got whacked. Okay. Next day, we didn't even open up. We started down. We got whacked. Look at this day here. It started out down, like gap down, and then it got whacked. And how do I know it got whacked? Because that shadow tells me where the price action was. At one stage, the low of the candle was, well, no, it's still the low of the candle. At one stage, the current price was all the way down at the low. It has to be the case. And then the price started to come up. The price started to come up, but the demand started to come in. It soaked up that supply, that panic supply in the market. The supply washed out, and all that was left was demand, pushing that price up. So we can see that the downward pointing shadows point to where there was excess demand lying in wait in the system to buy the dip. The longer the downward pointing shadow, well, the only logical conclusion you can draw is the more motivated that demand was. If we've got lots of volume on that candle, this is where price action and volume come together hand in glove, is that it tells us, well, there was lots of demand taking out lots of supply. We know there was lots of supply. People were panicking. I don't know why. I don't care. I'm a technical analyst. I just look at my candles. But I know people were panicking because there was lots of volume, so there was lots of selling, but then there was lots of demand as well. And the motivation of the demand is exhibited in that candle in that high close, and it tells me, okay, supply's probably washed out, demand's in now. Okay, lo and behold, look, it turned out to be the low point, really, didn't it? And I can't just make this stuff up. It's just one case study, but go and prove this to yourself, and you'll prove this to yourself in 5 minutes. It'll take you that long to prove to yourself that downward pointing shadows point to where there's excess demand in the system. Now, I don't know if I'll find one very soon, but an upward pointing shadow, well, there's a little one there, isn't it? It's the same thing. The price was up there. We saw lots of demand coming in. We were an uptrend. Everything was hunky-dory. And this is why I say I don't know what's going to happen next. The fundamentals can change because they can literally change that quick. But I said we'll get a signal, won't we? And we got a signal here. That was looking great. I'd be happily adding risk until that candle. And I go, well, okay, well, I don't need to add any more risk. I don't think I need to reduce risk because, look, the trends are still very good. And then that's okay. That's telling me buying the dip. We're buying the dip here. Okay. Oh, okay. Dip's gone. Like that demand has been swamped. So now we've got something really sinister here, in my opinion. And I'd be, and I'm not just making this stuff. If you've read any of my work in ChartWatch, you know when we see candles like this on the ASX 600, you know how I feel. It's like, well, that demand's gone. It should have been there. We've got problems. Not terrible though, but we've got problems. Moving to a more neutral sort of positioning. White candles coming back in, probably not too bad. But we digress. Okay, demand side's back in control. Nothing goes up in a straight line. Well, this is a wonky one here. But I wanted to show you that upward pointing shadow. Think about what this candle means. Hopefully you get to the point where you can just read these candles like words in a sentence. Because that's what they are. They're words in a sentence. We build up those sentences into our price action. Okay? Sentences, price action like sentences, or did I say paragraphs? And we're going, oh, like short-term trend is maybe like paragraphs. The long-term trend's like chapters. And our job is to read the book, isn't it? Would you have seen that one coming? Probably not. Yeah, that much indication there. Big black candles, obviously, wipe out. Huge amount of motivated supply. If they happen on volume, lots of supply came out, lots of demand came in, but the supply won the day. Long-term, short-term. Short-term is the green ribbon. How long is short-term? I don't know. It's what the green ribbon does. I don't muck around with that. Long term is the same. It's a dark ribbon. Hopefully some of those terms make things a bit clearer for you. Going to Wayne. Wayne's got BGL. Says, love your work, Carl. Thank you, Wayne. I love doing the work for you. We're going to go here, BGL, which is one that I put in ChartWatch. Oh, I definitely put it in here and here, I think. And maybe I'll put it in here as well. And that's today's candle. In fact, it's probably going to go in today. If that candle holds, it's a live candle. We shouldn't even be looking at it, ladies and gentlemen. We're very naughty. But if that candle holds, then it will go in again. And this is more of a turnaround setup, which we haven't talked about today, have we? Because people might be baffled. Hey, Carl, why did you put this in? It doesn't have two green ribbons. Okay, well, now you're starting to see that there's two types of setups that I have. There's a continuation setup, APE, very much a continuation setup, double green, great price action, great candles, hunky-dory, everybody loves it. And then we've got something like this, which is more of a turnaround setup. That's literally what I call it, the turnaround setup. Why? Why do I call it turnaround setup? As it's turning around. But nothing goes up in a straight line forever, just as much as nothing goes down forever. So I want to find these opportunities where the trends are changing, but I can't do anything whilst the trend ribbon is pink. So that's my first rule. So I can't do anything on BGL. When I say I can't do anything, I can short it, but I certainly can't buy it. I can't add risk to the long side during here. But once it turns amber, okay, things are starting to turn around. That long-term trend is starting to turn. If I can find enough evidence in the other stuff I look at, which is my short-term trend, my price action, my candles, and volume starts to come into play now for these turnaround setups. This is where volume becomes really important. Then I can look to trade a turnaround setup. These are by definition higher risk. Why the higher risk? What do you think? They're turning around. We're not sure. The market's still not 100% sure. I'm looking to get in early. I know I'm taking more risk, so I go into these things eyes wide open. But potentially we know when things turn around, there could be higher reward. So I think I'll get compensated by it. I think continuation setups are lower risk. Okay, the market's in consensus, clear consensus, and there's been in consensus for a long time. Here we've got a growing consensus. Okay, so if we look at some of the elements of my turnaround setup, and this is not news to you, I've actually put this in ChartWatch before, the exact criteria of my turnaround setup. I've called it exactly that terminology, as well as the continuation setup. So these are not new concepts, these are revision for some, I guess. Do we have demand side price action? We do. We've got higher peaks, higher troughs. We've got those higher peaks or points of supply. That supply is being removed from the market. That we need to see that because there was lots of supply. Was there lots of supply? Holy moly! There was a French word again, crapload of supply. We can see that. So we need to trade with that supply. Demand's coming in. That's cash coming in. Don't forget, demand is cash. We need to get rid of that dead woods. Okay. So what does that mean? In terms of volume, we want to see increased volume, don't we? We want to see volume picking up because we want to see that churning through that supply side. That can only happen if you trade with them. We want to see the short-term trend ribbon turn up. I probably shouldn't mention that first because that's well, actually, I think you see the price action first. You'll see price action move to higher peaks and higher troughs first. Then I think you'll see the trend ribbon turn green. That's another essential element of my turnaround setup. And then you'll see the long-term trend go amber as a minimum. If it's up, that's better, but it's probably a long time for that to happen. These are early stage entries, remember. I want to see lots of white candles coming in, and I'm seeing those more and more. I want to see fewer black candles, obviously, fewer upward pointing shadows. I want to see downward pointing shadows. I want to see a strong signal. I want to see an interaction with the trend ribbon, so preferably a peak that occurs in or above it, a trough that occurs preferably in the top half of that trend ribbon. Above is better. The higher that trough occurs, above the halfway point, let's call it, of the ribbon, the better. And we're seeing these things because ultimately that trend ribbon, that long-term trend ribbon, I don't know if you've noticed, many of you probably have, is that it does a very good job of repelling hopeful fledgling rallies in downtrends. Didn't quite get it 100% right there, but that trend wasn't completely established. It was more established here, but still did a good job, I think. So if I know that trend ribbon is likely, more often than not, to repel a fledgling rally, then logically it makes sense to see that ribbon transform itself from an area of dynamic supply, again, your terminology, you probably heard me right 1,000 times, to an area of dynamic demand. Okay, I want to see the price bouncing up off the trend ribbons. And that's my turnaround setup. So I don't mind this. If I had to summarise this, I think MRP goes without saying, maintaining our existing risk position if you have it. But I also think it's a plus R as well, but it's a higher risk plus R. And you need to take that into account in terms of the other ones you see and how you feel about higher risk setups like this. Some people, they don't care about the risk, they just love bargains, don't they? And I think that's why the turnaround setup, in my experience, is very appealing to people because they go, that one was, Bellevue Gold was $2.10, I can get it now at $1.10, it's half price. That's not how markets work. The other thing I'll point out is I can't pick the bottom. You'll never see me, and if you choose to follow my model, I'm sorry, but your days of picking the bottom are over. Isn't that devastating? Your days of getting out right at the top are over as well. You can't do it anymore because you need these signals to develop to have enough evidence that more often than not, the thing you're going to do is the right thing to do, which is to jump into new risk or to take some risk off the table. So you'll never get out the top because you'll need some black candles, you'll need some lower peaks to tell you it's time to take some risk off the table, and you can never buy at the bottom. So don't worry, there are smarty pants out there way smarter than me buying at whatever that was there, 78 cents. And they're patting themselves on the back right now. They're probably even starting to become supply because that was a good trade. But they're not bothering to ask themselves, well, what's the rest of the market think? They're still thinking about what they think. I could not possibly buy on that day. I can tell you on that day I would have been adding risk to the short side, and I would have been wrong. Trend followers get it wrong at the bottom of trends and the top of trends. That is something we accept and we move on because we know that MOTN, the rest of the stuff's pretty good. Tanya's saying, speaking of ribbons, where do you get your GFX ribbons? No, I make those. I scrape the data every day, Tanya, and into my environment, and I plot them myself. You can't get that chart anywhere else except for me. I put them out on Twitter if you're wondering. I put out charts, lithium charts every day. It's a hobby of mine. Watching the lithium market. If you follow me on Twitter, you already know that. If you don't follow me on Twitter, it's just at Capolingua. And I post a lot of other stuff. It's not just lithium, of course. Okay, let's get to Damien's got TBN. How are we going for time? Look, not too bad. We've probably got about 10 minutes left, everybody. Okay, so keep that in mind. We go into these knowing that I can't answer everybody's questions, but the goal here is less about answering questions, but hopefully learning something new each time we catch up. Okay, we're going to go to TBN. I will pick up the pace, and maybe we need to do a bit of the less of the education, more of the just what do you think? Look pretty good. The first place I was going to go there. Well, there you go. This instinctively I was going to go down here and start drawing arrows and say, look, we're seeing an influx in volume, and volume is the lifeline of any of these small cap stocks. Without volume, there's no interest. So volume is interest. Imagine the stereo. You got your stereo at the house across the road. If they're having a party, the stereo's down low. You can't hear it. But if their stereo's cranked up to the top, the volume is way up high, and you can hear that doosh, 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 doosh. You know there's a party over there. You're probably going to go over yourself, knock on the door and say, hey, what's going on here, guys? And that's the same thing with volume. Volume is that doosh, 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 doosh. If there's something going on in volume, if that's turned up high, there's a party going on, and people are going to come over and have a look and say, hey, what's going on here? And so that's the first step there. It's essential for these small ones. Less important for the bigger ones, but really essential for these small ones. The price action is all over the show. This is the drunken zebra. Can we call it the drunken zebra? The black and white candles, the zebra there, just drunkenly wandering across the hinterland there. Not very decisive, not a lot of consensus. We can see some consensus is building because we've got that breakout. That's important, but it's a bit sketchy, which makes it hard for me. It's hard for me to do technical analysis where there are so few technicals to actually identify what are the trends. I think the short-term trend's up because I've got a green room. What's the long-term trend? It's completely dead flat. What's a price action? I don't know. Hard to tell, Carl. It's a drunken zebra. What colours are the candles? Drunken zebra, Carl. Also, there's a bit of a big point of supply up here. Look, and I always preface these things by saying, I don't know what's going to happen next. Okay, I don't know anything about this stock, nor do I want to know. If you were to come up to me and tell me about Tamboran Reese's, Carl, you've got to check out their tenements. Mate, their tenements are incredible. They're bordering BHP, Northern Star, Evolution, I don't know, Pilbara Minerals. Mate, they've got gold, they've got lithium, they've got iron ore. It's all in the same place. They're drilling right now. My best mate's girlfriend used to go out with the guy who actually cleans the toilets, but he had a conversation with one of the guys who was on the drill rig passing through the office. And I tell you what, the results, mate, they're going to be spectacular, Carl. Please, you need to know about it. Like, if you start telling me stuff about the stocks that you're interested in, I'm going to very politely just turn around, walk to the corner, and do Duolingo on my phone because I'm learning French with my daughter. I love Duolingo. I'll go over there and do something far more interesting with my time than listen about your stock, because I don't care. All I care about is demand and supply and price. And look, they're telling me something is up here, something's interesting is going on. I could certainly watch it. I could keep an eye on it. If it starts to develop in the way that we're starting to see, we've got one up move. We've got literally one move up. We've got an impulsive move. Let's see how the supply side responds. Do they respond with a whole heap of black candles because they're so glad that they're finally getting out of this piece of, what? People will think like that. Oh my God, this thing has done nothing forever. I'm so glad I'm finally getting out. Or do they hang on? So if they're of that mentality, we'll see black candles, we'll see upper shadows, particularly upper shadows. As the price goes up, people selling into that rally. Or do we hold with white candles? We've got one candle today and it's still a live candle, so we can't do anything with it. But if we hold white candles, it tells you that no, that selling hasn't come into the market. In fact, demand is soaking up anything that's still coming out, even at the higher price. Because previously we could see high prices were aggressively sold into. Now they're not. Now high prices are being supported. But we don't know that because we don't have enough price action. We've only got one up candle. So long story short, not enough evidence here, but something good's going on. You know, I could certainly MRP here. But as far as adding risk or reducing risk, there's just not enough evidence. But if anything, hopefully we've learnt some of the ways, a new way to look at these small cap stocks and when they start to get going. Let's go to Manu, who has Telix. Okay, well, Telix is a super interesting one. So I'm pretty sure we did look at it last week, and I drew a few arrows on it because I was trying to figure out, well, when did I actually put it in my downtrends list? So Telix is one that quite early on in this process, because we talked about the turnaround setup before, didn't we? Of the turnaround from downtrend to uptrend. Well, this is the same thing, but in reverse, this is a turnaround from uptrend to downtrend. So uptrend, we see the interactions start to fail at the short-term trend ribbon. Then they interact with the long-term trend ribbon. At the start, the long-term trend ribbon does its job. It acts as a trampoline supporting price. But when the long-term trend ribbon changes color and it starts to not support price anymore, that's when I start to put them in my downtrends list. Okay, and this one featured as a downtrend, highest conviction. Now, some people like to short these ones when they see them in the list. Right there. I think it might have been even earlier, but certainly there and certainly there and certainly there. And I think if you shorted that, you probably would be pretty happy with the result. In fact, I did get an email from one of you, literally, I think on that day or the day after that, and said, or no, actually it dropped. It was on that day there, and they said, Carl, that wanted to thank you because I saw Telix pop up in your downtrends list, and I sold on that basis. Now, I can't tell you what to do. That's not the function of what I'm here for, but I can tell you when I think the demand-supply dynamics have changed. What you do is obviously your decision. But I do find that more often than not, these things tend to play out in that fashion. Look, it did have a bit of a bounce on some news. This is what we talked about last week. And we said that it comes back to that Tamboran resource, isn't it? When the price rallies, is it being supported by demand? Is the demand side going, you know what, actually there's some real urgency here to continue to buy? Or are we seeing the supply side come in and say, oh, higher prices, higher prices, higher prices. I know what to do with those. Yeah, it's Telix, I need to get some more out because we're in this change of trend sort of mentality. So that's where I'm with this. Would I have an MRP here? No. So this is me. You guys do whatever you need to do, but I'm a ZRP on this. What does Z stand for? Zero risk position. So personally, no, I can't own a single share of Telix Pharmaceuticals because it doesn't meet any of my criteria. Doesn't matter what I think about the stock, it just doesn't meet my criteria. So this is not me saying buy, hold, or sell. This is just saying, well, this is my model. Would I add risk to it? No. It's nowhere near. Does it have a light green ribbon? Is the price action higher peaks and higher troughs? Are there more white candles than black candles? Now, there are some signs in there that maybe it's trying to find a low where demand is, at least we can see demand is trying to come in. We've seen a bit of an influx in volume here where maybe demand is trying to soak up that excess supply that's in the system. So clearly in the system there's excess supply. And if demand can soak all that up and then that supply is gone and demand is motivated enough, we'll get a rally. But I'll see it in white candles, I'll see it in high peaks and troughs, and I'll get into Telix then. Remember, I can never get in at the bottom. So if this is the low in Telix, I can't know it. I can't know it yet. I'll know it in about 3 weeks' time. And I'm happy to buy it at 18 or 19 or 20 when it's interacting with my long-term trend ribbon, but I'm not happy to buy it at 13. And that might seem counterintuitive, but at 13, the probability is stacked in it going down. And if you're buying against that probability, let's face it, nothing's 100%. Sometimes you're going to get it right. But I think we've learned when we look at charts, particularly like Domino's, which is the classic one, I'm pretty sure this is the most featured downtrend I have in ChartWatch scans, which started back around here. And just look at Domino's. Like, I mean, if at any stage you thought Domino's was a buy through this phase, that's okay. I respect that. You would have had your reasons, but I just think you're just going against what the rest of the market actually thought of Domino's, because every time it rallied, they smashed it. you were looking at a rally of, finally it's going back up, but they were looking at a rally as an opportunity to sell some more. And we know that when we do buy and we try and pick the bottom, sometimes they can be right for a little while. But then, what happens more often than not? So just getting back to Telix, that's the risk here, is that we're at the start. Actually, just go back to Domino's because it's a great, this is what I prepared earlier, no pun intended with the pizza. But lo and behold, ladies and gentlemen, Your Honour, I rest my case. Holy moly. Look at that. It's not Telix, but it's the same chart as Telix. They completely cannot get two more different companies than Domino's and Telix. Yet, ladies and gentlemen, when their trends turned, they turned in an identical fashion. Oh my gosh. You don't need to know anything about these companies to know what's happening in the demand side environment. So my fear with Telix, and this is where the two link together, is Telix there? Telix has started to rally, but is Telix there? I don't know yet, and did at any stage, we won't go back, but at any stage did Domino's confidently break above that long-term uptrend ribbon? No, it didn't. And that's my fear with Telix. Okay, we are going to do literally 3 more, and then we'll adjourn for the day. So I'm going to scroll down to the bottom, and we'll for the people that obviously been thinking that I'll never get to them. I know it's frustrating for the people that haven't got their questions answered, but that's just the way it is. And we'll be back next week and the week after and the week after. So keep trying, and I'll get to yours eventually. Okay, Tanya's saying, très bien. Thank you, Tanya. Do you have stop losses? That's probably more complex than I want to talk about now, Rob, I think. I have points where I reduce my risk, but I don't think in terms of stop losses, fixed and finite stop losses, that probably a conventional trader might think of them as. Because I don't know how the price action is going to play out in advance. I can't see the future, but I certainly do follow when the price action and candles are telling me to reduce risk. That's when I reduce risk, and you could call that a stop loss. Maybe that is enough, a sufficient explanation for that topic. Let's go to Dave, and I say that it's Dayve, so I'm going to call you Dave. Tell me what EMAs use. I won't spend any time on that, Dave, because it's in the ChartWatch. It's in every edition of ChartWatch that I write 5 times a week. I tell you which EMAs I use. So go to the website, go to ChartWatch, scroll down the bottom. There's a primer, link to the primer, and that's there. I don't hide anything, ladies and gentlemen. Why would I hide this? I want to share it with you. Let's go to many thanks for MAF. Good. Oh, that's good. They're not questions, so I'm not disappointing anybody by not doing them. We're going to go to Alan. A long way above the short-term trend ribbon. The short-term trend ribbon is a distance away from the long-term trend ribbon. Looks vulnerable for a potential pullback. Oh, okay. Yeah, look, absolutely, it's possible. But I don't know. I can't tell the future. So some people might say, it's a long way from the trend ribbon and therefore it's prone to pullback. But what I would say to you is what's a long way from the trend ribbon? So we might say that was a long way from the trend ribbon. Okay? Well, it kept going up for a while until it had a pullback. But we'll get the signals in that to reduce our risk. And this is where the not all in and all out, I think, really comes to the fore. What's a long way from the trend ribbon? I don't know. Is that a long way from the trend ribbon? I don't know. So I don't stress about those things. I'm more concerned about if there aren't any signals, then everything's fine. If there aren't any signals to do the contrary. And I think we'll find every time there was a reversal. So you might be looking at the symptoms and not focusing on the disease. I don't know if I got that analogy right, but basically you're saying, well, every time it went a long way from the trend ribbon, every time the light green was a long way from the dark green, the price turned down. And what I would say to you is, well, that's kind of not the point. Every time there were some really big black candles, it told us that supply was coming into the market, and that made it more likely that price would come down. So I think you're kind of maybe confusing one thing with actually the other, and let's just focus on what happened with supply and demand in the market. And there were other things there that might have been more likely to explain what you're seeing than just, well, the light green was far away from the dark green. Think about that. Let's go to Droneshield. Richard's got Droneshield, and then I think we're going to do 1 and maybe 2 more after that. So we can't go on forever in these things, of course. Droneshield looks fantastic. It's a picture of excess demand. I know today's candle is live, so we must see how it closes. So actually, I'm just going to pretend today's candle isn't there, and that's the one we're talking about. Well, Carl, it's incredible demand. Well, I don't know. That supply could come in and sell that rally into the afternoon. We get a different feeling of what's going on. But certainly prior to that candle, everything was great. I did run it. I'm pretty sure it's a feature here and it's a feature here, but I have run it as a feature all the way up, to be fair. But you would have reduced some risk along the way, and this is why I don't like to be all in and all out. As long as that's up, you've got an argument to have some risk on the table, as long as it's green, I should say. And you might have got around, let's say you bought 100 shares, in this process of going up, and you might have sold all but 10 of your shares by that stage down here when you start to add risk back in. But happy with that one. Let me write on the screen so it is very clear what my feelings are. I'm happy to maintain my risk position and happy to add risk, but of course that's always based upon the last closed candle, which is not today's candle. MAU, this one is for Peter, and we've got one more after this. Starting to look interesting. What I would question is, geez, where was it in the rest of that rally? And I'm always a little bit skeptical of the last ones to the party, Peter, if you know what I mean, right? Because that small one's been going bananas for a long time. All the mining stocks have been going bananas for a long time. And then finally this one gets to the party. But taking it on face value, we've got a lot of good stuff going on in terms of, yes, the party is seemingly started. We've got a little bit more volume coming in. We've certainly got this big white candle. Instead of the investors in MAU going, oh, finally this thing's gone up, I can sell, that we're actually seeing demand being supported here. Demand is still in the market, or demand supporting price. The supply isn't desperate to get out, and that's a good sign. We're back above the long-term trend ribbon. That's important, and the short-term trend ribbon is trying to turn up. The price action is rising peaks and troughs again, and we've got some good candles. So you can see if we were ticking boxes here, we'd have quite a few of the boxes ticked, but not all of the boxes ticked. Okay, so what I'd like to see here, before I can add risk to this, I'd like to see, look, another trough. Any trough up here would be great, because it would just confirm for me. I can see supply is not actively becoming engaged, and I can see demand is quite strong. But if I could see any pullback that terminates at a point of demand, it defines it for me. It now caps that supply is actually not very motivated and demand is motivated. We've obviously got another point of supply to deal with here. We saw earlier on the historical points. So there's a few things that need to happen. And whilst I'm waiting for all that to happen, I'm off doing other things. There are plenty of charts that are meeting my criteria. But it's one we'll look at. I don't think we need to trade it right now. I'd be happy as an MRP at this point in time, maintaining my risk position, but not adding risk until I see a few more things go right for this one. But just giving you, I guess, some of the thought process I go through. AGL is a fantastic one to go through here, because this is potentially now moving into a turnaround phase. It's still early for me. I can't do anything with this. I can't be long and I can't be short. So I think I'm very, very neutral here. The short-term trend obviously is neutral, but it's starting to improve. The price action will improve before the short-term trend. I said that before. And we're back into rising peaks and rising troughs with predominance of white candles. We've got some really strong white candles coming in, some motivated demand looking to buy the dip on this one. However, we've still got this problem here. It's still on a long-term downtrend. So I'm not sure yet if it's a turnaround setup because we haven't met the criteria for that, or it's just a dominoes where we're getting a sharp rally, a credible rally that needs to be monitored, but within a developing long-term downtrend, and that in 6 months' time, this thing's going to be at $5, and this was just another rally. So I can't do anything with it. Remember, I can't buy at the bottom. I can't buy in here. I'm not. It's not me. And everybody does what they're comfortable with. I'm not comfortable. I can't do it. I'm sorry. But I'm happy to look at it. I'm happy to watch it. I'm happy to monitor it. And that's where I am. What I can say is this is no longer like it's no longer a short for me, or it's no longer a reducing your risk to this one. There's enough in there for me to now be comfortable holding the risk I have because it warrants further investigation. Okay, what I'm going to do here is go back and thank everybody for attending today. Once again, apologies if I didn't quite get to your request, but as I said, I'll be back next week and keep tuning in. The most important thing is hopefully you learn something new about trend following, isn't it? And about trading and investing in general. Hey, if you're watching on the recording on YouTube, make sure you hit the thumbs up button to tell us you loved what you saw today, and hit the subscribe button to make sure you are always notified when new content is added to the site. Look, apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you today. Hopefully you enjoyed yourself. I certainly did. Hopefully you learned lots. All the best for your trading and investing until we catch up again. Bye-bye for now.